I'm Alan Mendelson. You know me as being the financial reporter for the CBS television stations in Los Angeles. Now I want you to meet certified financial planner Brian Gilder, who has some important information about life settlements. What is a life settlement?
A life settlement is a sale of your life insurance policy for more than what the cash surrender value of your policy is, but less than the death benefit. Let me give you an example. Suppose you have a $500,000 life insurance policy and you're a 75-year-old male, and you want to sell this policy. And let's say you have $50,000 of cash surrender value in the policy. You should get an offer of your policy in the secondary market, which is bought by big banks and institutions and hedge funds, of anywhere between more than $50,000 but less than $500,000. That make sense?
Yes, it does. So what you're doing is you're transferring the policy to somebody else who's going to wait for you to die.
Basically, you're transferring your rights to the death benefit, and for that option, transferring the rights, you're receiving a lump sum cash payment today, so you can use that money any way you see fit.
In other words, your heirs aren't going to collect the money. You're going to get the money now, and someone else is going to wait around for you to die.
That is the way it works. But I think in today's environment, people are needing to sell their life insurance policies because of the way this economy is running. People don't realize their old life insurance policy is actually an asset to them than a liability, because many people are very stressed about paying these premiums. Also, premiums could be going up on their life insurance policies. And many people are saying, hey, I cannot afford to keep paying these premiums. And I bought this policy for my kids one day, but hey, I got to take care of myself right now. So there's a big market right now for life settlements in the secondary market where people are selling their life insurance policies, they're collecting the cash, and it's helping them supplement their retirement fund. And the kids I know might be upset about this, saying, well, I'm not going to have a death benefit one day, and I've been counting on this. But think about it, children who are beneficiaries. Your parents are not going to come to you and bug you for this money that they're going to need to help fund their retirement, because they're living longer, people are living longer, and they need extra assets. And the way their interest rates have been in the stock market, this is one area where you might actually fill that gap of money you need every month.
It sounds like a brilliant idea. Why wait till you die to get the money when you can get it now?
Well, it is a great idea. I think you have to be careful of who you deal with. There are people who are, in my opinion, not too honest in this business. They will not tell you all the information you need to know. One thing, though, I would tell people is if you're thinking of selling your life insurance policy, check your policy, because you might have some benefits in your policy that might get you more than a life settlement, such as an accelerated death benefit.
You're also saying to check the fine print in your policy before you sell it.
Correct. Because, God forbid you had a terminal illness. You might have a rider in your policy that might accelerate your death benefit.
You can collect your money early
you
while
can
you're still alive.
A percentage of your money, maybe 60 to 70% of your death benefit. Now, some insurance policies now have similar long-term care riders to their life insurance benefits now, where if you need long-term care, you might be able to access 1% a month of your death benefit. So on a $500,000 policy, you might receive $5,000 a month from your death benefit. So you have to weigh that consequence, because do you want the $5,000 a month, or do you want to try to get that lump sum of money? Now, usually when they have these riders on these policies, those are for the rest of your life. So you really want to weigh that, because once you sell the policy, you're giving up all your rights to those benefits. So you really need to weigh those rights that you have in your policy.
So check the fine print before you sell.
Check with the agent, check with the insurance company, and make sure what the agent tells you is correct. And when in doubt, talk to a third person.
And always read your own policy. It's right there in black and white.
Read the policy. The problem is people can't understand policies. They can't. I've gone through many policies. You really, really need an expert, preferably a CLU, a Chartered Life Underwriter, who has got extensive background information on life insurance.
With so many companies and investors buying these policies, it seems to me that you could shop around to get the best deal.
You can shop around. There are many providers. It's a matter of working with, and I can't stress this enough, someone who understands the life settlement business. Your typical health agent or insurance agent probably does not understand this business. I understand this business extremely well.
So have a good agent shop around for you and make sure you're getting competitive bids.
Yeah, get very competitive bids, because you could see bids 30-40% difference.
And at what age do you consider selling your life insurance?
Well, usually most people sell them when they're seniors. In the 70, when you're in your 70s is usually the target market. There's sometimes a little bit younger. It all depends on health, but I would say most of the time ones we deal with are in their 70s, and we've done probably billions of dollars worth of life settlements on the face amounts, and usually it's mostly around their 70s.
If you have more than one life insurance policy, you can sell all of them or just a few of them or just one of them.
Yeah, you could sell one of them. Actually, what you could do on some of your policies, you could sell a fractional share of your policy. So if you had a $500,000 death benefit, you might say, well, I still want to keep a little bit for the kids. You might be able to sell $400,000 of that $500,000 death benefit and get paid on that part, and then still have a $100,000 death benefit when you pass away to go to your beneficiaries. Most people don't understand you can do that, fractionalizing it.
You can get more information from Certified Financial Planner Brian Gilder. Call him at 310-804-3767. Again, 310-804-3767. Or write to him at 8383 Wilshire Boulevard, Suite 240, Beverly Hills, California, 90211. I'm Alan Mendelson. Thanks for watching.